following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your word. Manifest your true intentions, regardless of what language you speak. Your intent will manifest through the word. What you dream, what you feel, and what you really are manifested through what you say each and every day. Market-wise, let's take a look at it out here. We have the Dow Industrials down 606. NASDAQ is down 154. S&P's off 44. Bottom line, folks, the broker-dealer community's out there saying buy, buy, buy. Guess what? Don't even think about it, folks. Bottom line, this thing is coming down fast, furious. You're on a Thursday, coming into a Friday. This thing is going to be sideways or build some more cars and go after this B point. Gold contract. What do we have with the gold contract? That's up 560, trading at 13.20. You have silver up $1.40, up $1.42. Wouldn't that be sweet? Up 14 cents at $16.38 an ounce. Copper is at $3.08 a pound. Light sweet crude down 79 cents, trading $61 flat. Notes and bonds. You get the 10-year note down 3 ticks, 120.28. 30-year bond down 19, 144.02. King dollar down 3 ticks, trading at a price point of 90.115. The euro is trading at a 122.63 to 1 US dollar. The yen is at 108 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we get the high volume low laying out here from Monday. That's 258.70 in the SPY. 355 million shares. So we get a 144 right now. Bottom line, if we tested that right now, guess what? You get a nice bounce going. That being said, well, we're 4 points away from it. So what I expect you're going to see, number one, is that we're not going to get down to that. What I do expect, though, as we're coming into the close again out here, you're going to see some heavy down selling. The reason being is that it's the same setup as yesterday. The broker-dealer community, everyone's out there saying stocks are on sale, this is on sale, that's on sale. They're getting people long in the market again, and guess what? They're getting flushed down the toilet intraday, and when this market comes into a low, folks, you're not going to hear any of these broker-dealers out there saying buy, 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 stocks are on sale. The ironic part about when they're saying stocks are on sale, the PEs about as high as they have been in a long period of time, so they're not on sale. Well, I guess on sale would be what someone's perspective is about on sale. Gold contract. What do we have with the gold contract? Gold contract out here today did reject lower price. Coming into a Friday, this gives us a break. That's the bottom line. You know, we came right back to where we broke topside on the 29th of November as well as January 2nd. That January 2nd was 1309.30. We come down to 1309. You rejected it. Now the baby has a chance to get up to 1337. Right now we're at 1320. Where I'm going with the 1337 is just kind of the lows of how we came off the highs. That's how this is setting up. If we go take a look at the GLD, same type of setup inside the GLD. The GLD you talk about a contraction. No one's selling that GLD, man. So we're not going to need a lot of buying for that to go higher. You know, we came down yesterday with 8.5 million, which is going into 11.5. Today, you're testing that out with 5 million. So that is a decent setup for a higher price. Bonds, the 10-year note did reject lower price. We'll see whether they get any juice. And good old King Dollar. King Dollar still can't handle higher price. King Dollar, it's pretty amazing watching this. King Dollar yesterday had a shot to get a good bounce going. Gave it up today. Bottom line is that we got to a price point today in King Dollar of 90.455. And that number, by the way, it's 90.530. That's what I was looking for it to go into. And what that is the low of the downdraft that was out there when it really broke down big on the January 12th. And that number there, I believe, had 40,000 contracts. So today we've done 33. You haven't been able to hold price. That just sets up another test of 89.415, which is the high of the low of January 25th. That's the short term. The longer term aspect, we have a monster ABC structure on the way down with an 82,500 handle. Right now, you're at 90.125. We're going to take a look at some of the higher volume stocks out here today. Twitter is up 335. We have Apple down 65. Microsoft's off $3. You get Facebook down $5. GE, here we go. GE, folks, bottom line. We're going to find out that GE cooked the books a million different ways. GE's busting lower again today. You're down 60 cents. You're breaking the swing lower, 14.71. You take this back. Bottom line, the highs of the lows of 2007 is game. We're getting closer to them every day. 11.35 is that number. The way that GE come down, if GE gets into that 11.35, 5.72 is game. And it's game in a big way. So GE's got some big problems. We go and we take a look at inside the Dow Industrials. They're all red out there today. And this is where, when you get a price-weighted index, great on the way up, vicious on the way down. Out of the 650 points today, Boeing alone is putting 94 negative points in. Home Depot's putting 46 in. 3M's putting 45. Goldman's putting 43. Cat's putting 39. So you can see how the structure is on the way up. It's great. On the way down, it's a disaster. You know, and this is where you absolutely have to start looking at the percentage moves versus the price moves. Because the price moves on the way up, of course, were great PR for the stock market in general, when they were always saying that, yeah, the Dow's up 300, the Dow's up 400, the Dow's up 500. Well, when you get a price weighting index, the higher you get price-wise, the easier it is to get, well, the larger the numbers are. Today, we're down at 2.68, and we had a long way into this close. Inside the NDX 100, you stay right there. We'll go inside the NDX 100. The move is inside the NDX 100. Right here, price line is down $58. You got Google down 28. Out of the top 100, we only have 4 stocks that are in the positive. You get O'Reilly Automotive up $3. You get Miley up 2.77, $2.77. Be right back, folks. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 630. You get the NASDAQ off 167. S&Ps are down 42. And if I want to, what you have here also, folks, is that when you get a flush down and you have a chance to actually even get a bounce going, you're going to get a couple big downdrafts, and you'll see this tick index go through the moon. Well, bottom line is that there's still no fear in this market. It's not even close either. The most fear was last Friday. You did get a minus 1652, which is a monster, by the way. Okay, if we had got a second one, that's what brings in bottoms, short-term bottoms at least. But the last couple of days, the largest we had minus 1267 today. That's nothing. And what that means is this: is that when you get a large tick index, this is on the NYSE, what it is simultaneously somehow we are all selling exactly within the same minute, all on the bid, not on the offer. So everything's getting fired off. The way that gets calculated is that they take the whole New York Stock Exchange, right? Which in this case, and this is what you want to wrap your head around also. So in this case, you got, let's see, let me get this. No, composite, NYA. 1 second, we got to do it this way. Okay, so you take the NYA, where's the amount of members? Come on, give me those members. Okay, I'm going to have to do it a different way. Normally I have the members there. Okay, so take the whole NYA. Inside the NYA, of course, what ends up happening is you have bonds, you have bond funds that don't trade a lot. Bottom line is that it takes all of those, and within a minute, you're doing how many have got sold on the bid, how many have got bought on the offer. They subtract them, and that's why it's so hard to get a negative downtick. That's large, number one. But when you do have flush outs down the bottom, that's what you get one. Within a couple of days, you get another one, and normally that gives you a shot to get some kind of a short-term bottom going. And right now, there's no fear. It's pretty amazing, but there isn't. And I suspect it's kind of like when I started the show explaining, yesterday the broker-dealer community was out there in a huge way saying buy, buy, buy. This morning they're out here again. It's like, wow, this is amazing. You know, it's the first correction in probably 3 years. And like, they're saying things are on sale. Well, guess what? Their idea of things are on sale are a whole different ballgame. Let's go take a look at Europe and see what we did over in Europe out here today. You had the FTSE down 1.9%. The DAX was off 2.6%. Let's go over to the DAX in Germany and take a look at the DAX. Because what you do have here is the aspect of, these are one world markets, so it can give you a good indication of what we're going to do. And what the DAX did out here today, the DAX went after the low of Monday, closed at a lower low. The low of Monday in the DAX was 12,232. We traded to 12,187 and closed at 12,260. So what that sets up is, let's go to the FTSE first. We'll do the FTSE too. Because what that sets up is that sets up a run for us also into this close. So the FTSE was down 108 bucks. The FTSE didn't quite make it there, but this is where you can learn a lot, especially in fast markets. So the FTSE, you know, started out today of 72.79, gave up 100 points, finished at its low. The low in the FTSE is 7,079. So it looks to me in these next 40 minutes that we are going to get this sell down once again. Pretty intense, too, because the amount of energy that it takes to do this 3 or 4 days in a row without a bounce is pretty intense. What the market has working for it right now is that it's a Thursday. That's where it's at. If this was like a Tuesday and the market had been down Friday, Monday, and Tuesday, you'd have a much better chance to get a bounce before the end of the week. It's much harder getting a bounce when you've had a rough week, period. You're coming into a Friday. It's like, okay, am I going to buy and sit there for 2 days? Most people will hesitate on that. And add on top of that I think you know, you had definitely buyers in here the last couple of days at the beginning of the day, and they've got smoked. If we take a look at the NASDAQ composite, the composite looks to me like it's going to be one of the first ones down here. So the composite low on Monday was 68.24. The close was 71.15. Now we're at 68.90, so this would be a lower close, dramatically so too. Let's go take a look at the NDX 100. Yeah, she's right out of the tube. So the NDX, the close on the NDX was 66.65. We're at, wow, that's intense. The low was 63.70. Right now we're at 64.22. So this NDX, I suspect, is going to go right after. Now, the real danger part would be if it doesn't hit it today, because it has a shot of hitting it, and then takes a good snooze tonight, wakes up tomorrow morning, and then jumps the creek and fires it off. So you can expect, listen, if you're long, get stops in. That's the bottom line. Get them in, because if this is an ABC down, just so you can wrap your head around this for a second, this is a monster ABC down. You know, you're talking about S&P points. We're talking about 20. So I think it's 2872. I mean, this is like one monster out here. The 2872 is your A point. Your B point is 2593. So that sets up a 279 A to B. 2727 is your C, which gives you 2448. 2448, pretty intense. 2448 is September 8th. Actually, yeah, September 8th, August 31st. So what you'd have there in the course of, and remember, an A to B equals C to D. These are straight line moves. So you can be in there in a week. And what that would have, that would do, it's, you know, when you look at this on a longer term aspect, this is, you know, this is still not a monster retracement, even doing that, 2448. Look at that. Okay, so this is cool. 2448 is the ABC structure. A .382 retracement is 2463. A .382 retracement is a normal retracement in a market that does want to go higher. Doesn't mean, I'm not saying it's going to go higher. What I'm trying to explain is that we have not had a retracement since February of 2016. So that's on the table. What's also on the table is a 50% retracement, which is 2338. So we'll see how this shakes out. The fastness of the move is going to be the whole name of the game here. Dow right now down 573. NASDAQ off $1.50. S&P's off 41. We'll come right back, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 616. You get the NASDAQ off 166. S&Ps are off 48. Let's go over and take a look at the financials, the XLF. So XLF right now down 72 cents. Going after the lows of Monday, dramatically lighter volume. This is so what you're going to want to do is go through a few of these ETF structures in the next couple of days, because what I suspect we have here, well, we'll know tomorrow. We're going to get this test tomorrow. 2717 is the number. So you're coming into that with lighter volume right now. We've done 99 million today versus 159. We take a look at this and put this on a weekly, and what you're going to see is that, you know, the weekly you're down right now at 500 million, and you're coming into 548 million. So 548, folks, was when we broke topside on February 1st, the week of February 1st. That's going to be important to keep your eye on, because if it holds, if the banking structure holds, well, guess what? Then you're going to see a bounce. If we go take a look at the XLE, this is in trouble. This is look at this. This is the telltale sign too. Oh, this is breaking. So XLE is already broken Monday's low. That low, $67.90. You were at $67.41. You get 20 million versus 32. What does happen with this, though, is that this will put volume in at the end of the day, too. So we'll see. We're going to know at the end of the day, is this another ABC down? This doesn't juice as much volume as like a GDX does, or an IWM, but it does put volume in at the end of the day. We go to take a look at ExxonMobil, and this is going to be a big trouble inside the S&Ps. The Exxon breaking down again, yeah, with monster volume. You can see this if you're watching Tiger TV. This is pretty intense. On a weekly, we're going into a swing point that had 42 million shares, and we're coming into it with 107 million, and we're a one-day shot. That's going to blow this thing apart. Exxon's going down to 66 bucks. It has a high volume low from August of 2015, 66 bucks, pretty intense. UPS. Now this is a heads up too, that I don't know whether this heads up is that Amazon is taking over the ground delivery business, but I can tell you that when you look at UPS. UPS is down $1.45. UPS is trading back where it was trading in October of 2014. That's a long time to hold a stock. Now, they do pay a dividend. I think it's like 2.7%, 3%. So you've made 3%, but guess what? In 3 years, almost 3.5 years, the stock hasn't gone anywhere. Well, it has gone. It's gone up and gone down, but right now you're right back at that level. FDX, let's go take a look at FedEx. FedEx down $7 today. That's not the end of the world. FedEx is much stronger than UPS. It's really intriguing, actually. Yeah, much stronger. Now let's go look at the king dog, Amazon. Amazon's down $47. That's going to go after its high volume low, too, which is at $13.20. Facebook. Okay, Facebook's breaking down. Facebook is going after its high volume low from September. The high of that is 169. The low is 161. Facebook's at 174. So Facebook, you're going to see some damage inside Facebook. That's how it's looking. NVDA. Let's go take a look at a couple of these chip stocks. They were rocket chips on the way up, no doubt. And they're not bad on the way down. You know, this is going to be a sector you're going to want to keep your eye on. NVIDIA has a high volume low at $204. Your 223 probably get tested. A lot of support at that level, though. That's the bottom line. This acceleration starting. You get 26 minutes coming into the close, and this Dow Industrials wants to print 7, 8, 9. It's one of these deals that it just likes high numbers right now. And let me see what the high number is at the low. It'll take quite a while to get to that low. That'd be 23,778. Yeah, we're not going to get there because that'd be down 1,200. That'd be pretty freaking intense if we're down 1,200 bucks. Look at this S&P for a second. Yeah, the S&P is going to have a shot at getting down here because the S&P right now is breaking the 2613. It looks like it's going to break it. If you break it, let's see what we got. That's a monster ABC down. So you got 2683. Yeah, you get another 70 bucks, which would get you 2575. Let me see what's there. 2575. Interesting. Okay. 25. Yeah, well, the low is 25.29, but 25.75 could be had. There's enough time there for it. And wow. Oh my God. Let's go take a look at the. Let's see the leader inside the NDX on the way down. Point-wise, is Priceline. Priceline's down 60. Amazon's down 50. Google's down 31. Tesla's down 27. NetEase is down 17. There's only 3 stocks that are positive inside the NDX 100. You have Pfizer, which is up $6.72. O'Reilly Automotive is up $4. And you have the internet stock, MELI, up 69 cents. So you don't see that too often. And let's just go back over and see if we have any real panic selling yet. So we just got the, is that 12? Let's see. No, we still didn't get it. There's still not a panic selling going on. We're down. The tick is minus 1267. That's not enough, folks. That's the bottom line. This thing, and I don't expect you're going to get enough, because this is what normally happens. When you only have 25 minutes left in the marketplace, the market itself doesn't even have enough time to bang down, to flush it down, because what does happen also is that you can't take the tick at the closing bell. The way this tick index works, you don't want to take it at the opening bell, nor the closing bell, because that what ends up happening there is it's skewed. That's the bottom line. It's skewed in a big way. I think what we just did is we just blew out the. We're getting right there. The composite's going to do it. The composite right now is only 24 points away from the low that was on there Monday. So there's no reason for it not to get there. And I suspect if it closes right there, then this will be some big trouble tomorrow morning. You stay right there, folks. We'll be coming right back. Get another 20 minutes for those machines to get turned off, and I'm sure there's plenty of folks that want those machines turned off right now. The Dow's down 747. NASDAQ is off 198. S&Ps are down 61. We'll come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow's down 790, Nasdaq's off 207, S&Ps are down 64. Let's go to Victor in Paramus, New Jersey. Hey, Victor, what's going on, brother? He's gone. Okay. Let's go take a look at the, so these, this Dow wants to print the 800, folks. Probably wants to print the 900. Yeah, you get 20 minutes. This can print 900 pretty easily. Let's go look at that thing for a second. So if I go into, and this has to do with, you know, you get these monster stocks that are price weighted, and it doesn't take much when they're going down the other side. So we closed on Monday at 24,912. This is going to be a, you know, this is going to be a, this close will be a lower close, because what did happen on Monday is that we got to 2377, but we closed at 24,912. You know, it was a monster bounce, if you remember that. It looks to me like right now that you're not going to get any type of bounce whatsoever. And what you also have is that you have the aspect, of course, which I was talking about, is that Friday, you know, bottom line is that this is not the time when the market itself and investors or traders themselves can basically get settled in and think clearly for a couple days. You know, so it'd be very unusual that you get a bounce coming in on Friday. You don't have to get a flush all the way down the toilet, but it looks to me like we are going to go after that low in a big way. We get Victor back. Hey, Victor, what's going on, man?
I took 666 and I times it by 4 and I got 2466. But next thing, where do you think AT&T is going?
Marbell. Let's go take a look at Marbell.
You know what they're going to do next? They're going to do quantitative easing once the market takes a real beating.
No doubt. No doubt,
right?
man.
And that'll bring that 10-year down.
No doubt. So, okay, so this is coming down, trying to test out the lows right now of Monday. And you got light volume, and that's also going against the breakout. So this doesn't look bad, man. You know.
Do you think it'll blow it out tomorrow morning, though? And then nobody will hold it over the weekend? And then...
Okay, 30. This can go to 34.48. This is still a decent setup, though. You know, you have a high volume high from last week at 39.29, and we still even have lighter volume than that coming down. So we did, well, let's see, 208. It's going to be close. We did 208 pushing into the last swing high, and right now you've done 175, so we'll probably do 2 something there for the week. So that'll get over that, but you're still coming into... This came off the bottom at 292, so it's still not a bad setup, man.
So how low you think?
Where I'm going is the high of the low that was generated the week of November 10th is $34.48. That's, I mean, that'd be a great buy there.
We're going to say the housing market. This is good for the housing market when the stock market crashes because it brings the lending rates down. No,
it's going to be a close call, man. What has happened is this: is that, and this is where I think the market's taken a conniption. See, normally we get a market that gets hits like this, right? The bonds would snap back immediately. Well, they haven't. So, you know, the 10-year is flat now. Okay, so it's, you know, but it's already broken. So, you know, my larger take is, yeah, this is going to be a much larger correction than people want, and those rates will go back down again. They haven't hit yet, though, you know. And
but you remember the president, he didn't want to own this market. He said this was the biggest bubble in history. Now all of a sudden he's claiming that this market's going to keep going up. So he's going to have to do quantitative easing, or otherwise, you know, he went back and forth. Remember he said this was the biggest stock market bubble in the world?
Oh, there's going to be a lot of politics.
From Goldman Sachs giving him the wrong stuff.
Yeah, there's going to be a huge amount of politics between the president and Powell, for sure. That's, you know.
And I heard every time you get a new Fed person, this always happens. When you got Bernanke, when you had this yelling, you know what I mean?
Hey, we've been used to low rates for so long, man. It's like, you know.
I think you're going to go back to his election day. There's a lot of gaps in the S&P 500.
There's no reason it can't. I mean, we you know, my correlation, and I think a lot of people's correlations forever, you know, as to who's in power, that has nothing to do with the market. It has to do with cycles in the marketplace. And, you know,
exactly.
Some presidents get lucky, some presidents don't. That's how it seems to go, man. So.
Well, have a good day.
You too, man. Have a great one. Have a safe one. The composite, let's see, you get 10 minutes. S&Ps, let me look at this S&P right now. So your S&P, your 2601. Now the low of the S&P, well, the closing low was 2694. So we're going to be, all these indices, folks, are going to be below the, this is going to be the biggest close that we've had, and I expect what you're going to see, just, you know, unfortunately, is that the flush down at the very end can be dramatic. I know since I've been on the air, the Dow has gone down another 200 points. But what does happen when you don't get a bounce, and we've been in a market that people have been so used to bounces, it can get pretty dicey really quickly because people can get forced out of positions. And then what also ends up happening is that there's plenty of people that if they've only been in the market for 10 years, they've never seen swings in the market that can be so dramatic, because it's hard to comprehend that you can have an S&P down $65. It's harder to comprehend, I think, that the swing today, let's see, yeah, the swing today has almost been 100 S&P points. That's almost, it's not unheard of if you've been in this market for a long time. It's absolutely unheard of if you've only been in this market for 10 years. There's, you know, because we just haven't had a market like that. Last time we had swings like that were from 2006 to 2000, like almost 8 or 9. The time before that was 2000. The time before that was 1996. In 96, you're dealing with smaller numbers, so you didn't have swings of 100 points. Swings of 25 points then was a big number. Let's go to the GDX. Let's go into some of these gold stocks. So GDX out here hasn't caught a bid yet. Bottom line is that you're into this big bar. You're 2170. The high of the big bar is 2231. So 2142 is game. That's the low of how we came off the lows in December. If we take a look at the XAU right now is at down 63 cents. Let's see. So yesterday it did 44 million. Yeah, see, this is good. The XAU, you did 44 million, and you're coming into like 134 million. That's what you like to see. XAU, Gold Bugs Index. That's down $1.25. when I give you this volume on the gold bugs and the HUI, this was yesterday's because it doesn't come into 8 o'clock at night. We came down on 29 million. Yeah, you're going into 101 million. It's a good scene. Stay right there, folks. Be coming right back. Giving the final numbers as well as lots of numbers after the close. Dow's down 824, Nasdaq's off 218, S&Ps are down 70. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. If we go over to the Qs, you're going to see the Qs just broke the lows of Monday, and they're not stopping. So the low of Monday on the Qs were 155.10. You're at 154.63. We've done 83 million versus 118. We'll see how much they throw into the Qs in the next 6 or 7 minutes. It'll be a lot. That's the bottom line. It'll be a lot. IWM hasn't made it down there yet. IWM, that's 144.24. You're at 146. If we look at the diamonds, diamonds are down $8.25, 240.55. That has another 3 points to get down into that low. And we take a look at the SPY. SPY's right at it, man. SPY's right at it. The low in the SPY is 258.70. You're at 259.64 right now. It doesn't have the juice behind it, but guess what? You finish here This thing can jump the creek in a heartbeat because the creek is pretty large, actually, when you take a look at the SPY as well as the NDX 100. It'll be, yeah, this creek's big, man. And it's been laying out there. This thing, yeah, this looks to me like it's going to be setting up in a kind of nasty way to jump that creek. And if we jump the creek, folks, on a Friday, you know, that could be the flush down. I know what will end up happening is that people will get really scared if we jump the creek on a Friday. They're thinking about a Monday. They're thinking about crash and all of this. Because just to wrap your head around something, too, by the way, this looks bad. And I understand, you know, it is bad if you're long the market. It's 3.5%. Right now. But the crash, folks, the market went down 25% in one day. So I'm going back to 87. But bottom line is that this is nothing compared to what an actual 87 event would be. And I'm not looking for an 87 event. That's the bottom line. What, you know, the deal is high markets, guess what? Go down with big points. We have the Dow right now down 900, NASDAQ down 235, S&P's off 75. Stay right there, folks. Coming right back with lots of numbers.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Get our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To begin a great relationship, know what you want. Know what the needs of your mind are and what the needs of your body are, and what fits well with you. There are millions of men and women, and some will make a good match for you and others won't. The two of you only need to be like a key in a lock, a match that works. Market-wise, let's take a look at it out here. We had the Dow Industrials down 1,032, NASDAQ off 274, S&P's down 76. Percentage-wise, what you have out here, folks, you get the Dow down 4.1%, NASDAQ is down 4%, S&Ps are down 3.1%. Big numbers out here. If we go take a look at where we are in the structure of the Monday lows, what you have, if we go to the SPY first and take a look at the SPY blew right by the lows of Monday. The lows of Monday were 258.70. We're at 257.77. You've done 220 million shares. You're going into 355. So the way that works is that that is not a confirmed ABC structure on the way down, because what happens is, on an ABC is that you have to take out the B point with volume. That being said, guess what? You're coming into a Friday, end of the week, bad market week. I expect this thing's going to jump the creek, and it's going to be a little nasty day out here tomorrow. That's your SPY. NDX 100, same setup in the NDX 100. That blew apart its lows, and this really got away from price either. Also, the low of Monday was $155.10. We blew that apart. We're at 153.45. You've done 91 million shares versus 118 million. Just so you can get acclimated to this too, is that we made highs, folks, of 32 million shares. Bottom line, the trap door is open. Market participants are getting out, but they're not getting out in a panic. And this is where this is problematic, meaning as to we're not close to a bottom yet. But if we go take a look at the tick index, what you're going to see is that we only get a minus 1374. And more than likely, I'm not even going to count that one because it was on the close. 1 second. Let me see how close it was to the close. No, it's all right. It's 20 minutes. So you can count that one. You can't count the ones right at the 4 o'clock. This is 20 minutes of. That's a decent one. It's not a monster one, though. The bottom line is that you need a much higher down tick reading. You need a couple of them within a couple days in order to start getting a bottom established. The diamonds. We take a look at the diamonds. What you have with the diamonds out here. Diamonds are closed down $10. The low of Monday was 237.54. We are at 238.67. The small caps, the IWM closed down 440 at 145. That low is 144.24. So we have 2 out of the 3 that basically have broken it. What you do have is in the Dow Industrials just laying right at its low. The low of Monday rather, was 23,778, and we're 90 points above that. The closing low, of course, the closing price was much higher because that was the day that we bounced. Friday we came down. Monday went to a lower low. You bounced. Bottom line is that I expect when Asia opens up, you know, Asia last night, let's see exactly what they did. They were mixed last night. So in Asia last night, the Nikkei was up 1%. Hang Seng was up 0.4%. Shanghai was down 1.4. They'll get smoked tonight. Over in Europe today, and this is where we could get an inclination as to what was going on in our markets. Europe did close at their lows. You had the DAX down 2.6%. The FTSE was down 1.9. The CAC in France was down 1.9. Spain was down 2.2. So they all closed at their lows, and it's going to be a rough day tomorrow. Gold contract. Gold contract caught a bid. You're up $6, 13.20. I suspect gold's going to run tomorrow. The real kicker is going to be, do bonds finally basically get out of these lows? And when we take a look at this bond market, we hit 120.17. I'm talking about the 10-year note market, actually. That tested the lows of last Friday, rejected them, so it has a chance for a bounce. We'll see whether it can bounce. It'd have to go up quite a bit in order to get back in the higher range. And what you have out here is that my take is that the market's taking conniptions because of the interest rate structure, number one. And then when you take that and you put together the Senate bill that they basically said, okay, we're going to spend a lot of money, we're going to take the debt ceiling off for the next 2 years, the market's looking at that and saying, okay, that's the quickest way that rates are really going to accelerate. And if we get a fast acceleration in rates, folks, you will see some destruction out here that'll be intense. Now, that being said, what I expect you're going to see is that the central bankers yesterday were coming out saying that they weren't paying attention to this market, meaning that just it's a downdraft, it's not a big deal. Guess what? They are going to start paying attention to it. And unfortunately, unfortunately for Powell, he is the new Fed chairman, and he is going to have to basically face the fire on this. And the fire would be that if everything is so rosy, you know, bottom line, why is the market going down, all right? Well, that's what happens, folks, okay, because what we had in a huge way is free money for a long period of time. And guess what? As you start taking that punch bowl away and money gets more expensive, everything gets more expensive. So the real kick is going to be, as that happens, is inflation higher than the rate of the 10-year? That's what it's going to be all about. You know, that's what the whole number is going to be. King dollar. We go over to King dollar. We take a look at King dollar. Because if that's what you have, then all these asset prices will keep going up. If you don't have that, guess what? They're going to get discounted. King dollar out here, King dollar hit 90.455 today. Couldn't handle higher price. 35,000 contracts. King dollar looks to me like, bottom line, it's going to start backing down once again tomorrow. Some of the higher volume stocks out here today, GE's toast, man. GE is toast. GE, we're going to be reading about GE cooking their books, folks. Pretty disgusting, actually. GE just took out, unbelievable, took out another B point or another ABC down. This is serious business. GE, you know, the 11.85 is game, but more than likely the $5 is game. Stay right there, folks. Come right back. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 1,032. NASDAQ off 274. S&P's down 74. Percentage-wise out here, that's 4.1% in the Dow, 3.9 in the NASDAQ, 3.75 and the S&Ps. Let's go over to our man, Mr. Basil Chapman, as we do each and every Thursday at 20 past the second hour. Now, don't forget, folks, Basil is an outstanding program every trading day right here, 12 to 1 Eastern Standard Time. Also has a great newsletter, the opening call that you can come, 30-day money-back guarantee. Check it out. The way you do that, you go TFNN, you're going to go to newsletters, you're going to go to trading newsletters, you hit trading newsletters, you're going to come right down, you're going to see the opening call right there by my man, Mr. Basil Chapman. Test drive that right here, right now. Now, as you're over at TFNN, folks, you're going to see in the very top of the carousel, we have the Tiger's Den. That's our trading room. It's open house all month. Great time to come in. Come on in, check it out, 30 days, absolutely free. Tell your friends about it. We got a lot of tigers and tigresses growling and prowling out here. Bottom line, it's active about 12 to 14 hours a day. People are in it all night. Well, they're going to be in it all night tonight, just like they were last night. The bottom line is that great trading room, great tigers and tigresses. Basil Chapman.
Hi, Tom. How are you?
Doing great, man. Yourself?
Very good. Thank you.
Well, we got a market, man.
This is a real market. This is the first time we've actually seen downside follow through for a really long time. The candles that we've seen on a weekly chart are the biggest candles ever that I can recall.
Yeah, it's a monster.
Yeah.
So where do you want to start?
Well, let's start with the Dow, as we always do.
Okay.
On the left here is my daily chart. In the middle is the weekly chart. On the right is the monthly chart.
Yeah.
So there are a couple of things here that are really important in my work. Number one is we're always looking for the peak D, the fourth highest peak in the Chapman wave. It can go higher, but D is where other things can happen. And it's just real simple. You identify the low bar, then you count each successively higher peak. And here we are at 26,616. January the 26th, the Dow makes a peak D. Followed by a red candle and then gaps down. We were lucky we got a short position on one of the pattern that I call the lowercase h right over there. Now, we were unlucky in that we held it all the way through, and then yesterday, because I changed the stop on the, we had the inverse position. So in other words, we were long. Yes. A short ETF. We got stopped out. It's a very nice profit, but it would have been great to. I couldn't get back in today because we didn't have that bounce. But that's the way it is. So we had a very good extension to the downside. 23,788 has a rebound to 25,200 area, and then what happens is it gives it all back. And this is the pattern that I've been looking at. The lowercase h. I said to my subscribers this morning to my opening call, we're looking for the H pattern to continue, and that's kind of what we're looking at here. I'll show you in a moment. Yes, your analysis was really terrific for looking at the Qs and the SPY. They've taken out the left side low of just 3 days ago. So we'll talk about that in a moment. What's really important to me is here we've got a peak E in the weekly chart. It also happens to be a 5 in the Chapman wave, a technique that I've developed and used for quite a while. And that means that this move down, you can see there's a dashed trend line that I had drawn in. Okay. We took that out and closed under it. But that is a weekly candle. So until tomorrow, at Friday at 4 o'clock, I can only talk about it as if there's still more to come. We don't know whether it'll be down. I don't know what's going to happen this evening. You never know. You can always get surprises, but boy, this is ugly action. And then the monthly chart now is in the leg E. I don't know what's going to take it to 26,617, one point above the high to recycle. So this looks to me like I've got to take this very seriously. But what's really important is when I'm looking at the overall picture, I said to you that my belief was, and I've spoken to you about this many times over the months, to say that the semiconductors basically led the market on the way up, and we'll see if it's going to lead the market on the way down all year. In fact, over the last 18 months or so, as the semis went to new highs, the Dow and the S&P would fall in the QQQ, the NDX 100, and on the way down, that's the same thing that happened. So we're fortunate. We've got a short position in the, it made a high, the SMH, the Semiconductor Market Vectors Semiconductor ETF, made a high at 108.56 on the 23rd of January, and we were short just a little below that at 106.41, and today it's trading at 95.25. And there's that left side low, just took it out, the 97.05 just from 2 days ago. So the 200-period moving average is at about 93.27, but it's the weekly chart. Again, it's these weekly charts that held so beautifully on the way up. Now they're starting to weaken, and that's a worry. And also we've got a peak, possible peak in the monthly chart. So I'm looking at this, and what I said on my show, my noontime show, the Tiger Technicians Hour, for a couple of days here, is that I have a way of looking at the market over the years. There's something that I call the internal low, and then you have to wait for the residual low. You think of maybe like an earthquake and then the afterquake.
Yes.
And sometimes in the semiconductors, back in 2000 and where was it? I had this earlier on. I showed it this morning. That's right. Back in 2008.
I remember that, Basil. I remember when you said that. Yeah, right.
Right. So that made its internal low,
Right.
but it was a higher low when the market finally made its March of 2009 low. So I'm looking at it that way. We've made some kind of a low. Maybe this is a combination here, and that we still have to have a big arch formation and do a retest. So I've said to subscribers, we actually have some longs that are still actually doing very well. GM is still way above the 34 entry point that we had. It's at 40.92. So yes, you can have longs. You just got to be somewhat careful now. But most importantly, the home buildings. I had spoken to you about this the other day. So this is, first of all, this is the chart of the yields. You did a great analysis. I won't go over it again because I concur exactly with what you were saying. But that 30-year, look at this, screaming to the upside. The 10-year is right behind it, and the 5-year is really, it hasn't been here since 2009. So that's the yields are climbing. The way I've got it, there could be a bit of a pullback over the next week or so. I think it's still going to go to higher in the weekly chart to a leg deep, but we are short a home builder. And if you look at the wood, which is the iShares Global Timber and Forestry ETF, look at this, is the deepest move down it's had since way back in, what is it, April of 2016. So this has to be respected. It's at 71, made a high of 77 just 2 weeks ago. And the HGX is the Philadelphia Housing Index, made a high of 369. It's trading at 318. That is big. That is a 50 to 60 point pullback, and it's just 3 weeks since it turned down. So I think that we have to. I know a lot of fund managers are going to looking for a buy, start and saying to people, now you're going to get bargains. I think you will get bargains, but you just need a little patience. And I've been saying to subscribers, let's get some numbers together. There's time, even if we miss a big move up, there's time to get in on the long side. Just let this play out. Have patience. This is the speed. We might be using speed rather than time. That's what we'll have to assess over the weekend. Look, that's a percentage. Right. Look at this. Pulte Homes, 35.21 on the 23rd of January, and today it's trading at 28.67. We are short this, but I mean, right on the 200-period moving average. That's the quickest down move. Look at this. This is the deepest down move it's ever had in this shorter period of time. So you got to, that kind of damage takes a little while to heal, and that's really what you have to think. Have a little patience. You'll get your entry points, and just be somewhat careful. Raise your stops if you're long, and look to where you'd like to have a re-entry.
And folks, you can test drive Basil's newsletter, 30-day money-back guarantee. Come over to TFNN, go to newsletters, go to trading newsletters, opening call. Basil, thanks so much. Look forward to the show tomorrow.
Thank you, Tom. Have a great evening.
Big action tomorrow, folks. Stay right there.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at some numbers and see where we stand out here. PCLN, Priceline. Priceline closed down 76 bucks, $1,806 a share. That's down another $66 right now at $17.42. Let's see what they say number-wise. Okay, so, oh, this is interesting. They didn't even come out with numbers. It's going to be Expedia. Oh, interesting. So let's look at this. We pull up Expedia. Expedia closed at $123, down $6. Ooh, this is trading down almost 18%. It's down to 104. So this thing went down 20. What, you get $27 today. Let me see what this looks like. Oh, this is a monster mess anyway. It's a monster mess. Oh, it's a monster ABC down. This thing's going down to 88 bucks. Okay, so let's see what they had to say. So Priceline's down on in Expedia's earnings. Expedia, let's see what we have here. So the estimate was $1.15 earnings per share. They made 84 cents. Revenue estimate is $438 million. They made $402 million. That is one monster hit, folks. Holy cow. So what's intriguing about that, the question is going to be who is taking their business, and what very well could be is the airlines and the hotels are taking their business. Because what the airlines and the hotels have got much better at, so picture this, Priceline, Expedia, their business is predicated on being the middleman, making deals with the hotels, making deals with the airlines, getting in the middle. The airlines have been working on this for a good time. They've had a harder time getting them out of the middle than the hotels have. The hotels have done basically a pretty good job of getting them out of the middle, and they've done that through the rewards program. But as we look into this, I suspect that is what's going to be the number. That is a big miss. There's no two ways about it. Yeah, you're talking about a monster hit out here. Let's go to, so that's the bearish one, down $27. NVIDIA, That closed down $11.28 today, trading at 217. This is trading up at 233. So this is trading up another 20 bucks, $17. So at 233, let's see where this lands. Well, it's at 235 today. So it's not over the highs yet. Let's go take a look at the numbers there. Numbers in NVIDIA go like this. This is a monster move. The earnings per share, the estimate was $1.29. They came in with $1.72. Revenue estimate, $2.68 billion. They came in with $2.91 billion. That is one monster move, folks. There's no two ways about it. ATVI. Let's see what we got here. I think this is Activision. ATVI. Yeah, you get Activision. This is the game maker. That closed at $65.83. It had been down $3.63 for the day. That's trading up back to where it was trading earlier. It's up $68.48. Yeah, so that still wants lower price. We look at the numbers here. Earnings, the estimate was 92 cents. They okay, well, that's fourth quarter. 1 second. Okay, that's right. The estimate was 92 cents. They made 94. The first quarter, they see. Oh, this is interesting. Whoa, when this comes across. The estimate in the first quarter was 45 cents, and they're seeing 31. So it's intriguing that they haven't hit that stock yet. Hey, we'll find out. But bottom line is that's how that seems to be settling out here. We switch gears just for a second and go over to Bitcoin. So XBT. So XBT, Bitcoin out here, traded today. They had a low of 75.34. You're at 81.71. Yeah, this thing's not going anywhere. Inside the two, in the CBOE, we traded 4,280 contracts. In the CME, you traded 904. So that'd be actually 4,500. You had Ripple was down another 2.3% to 74 cents. Litecoin was down 160 or 1.6%, 145. Ethereum is down 2% at 799 to 800. Let's go to the Qs just for a second. So the Qs closed at 153.45. It's trading at 154 right now. So the Qs, gained back like 45 cents after the close out here. This is going to be we're going to have a little problem in paradise out here tonight and tomorrow morning, folks, because there's not much that can really help this market on a Friday. A Friday in a down week is normally problematic. That's how those things normally shake out. And what we have inside the Qs is that we have a wide open gap at 147. Now, that sounded bizarre because all of 7 trading days ago were at 170. But 147, just to give you an idea, is just one more day like we had today inside the Qs. And that gap looks like it's going to get filled. That's on a short-term basis. If you want to see how this is laid up in a long-term basis, it's a heavy layup. And what I mean by that is that if we take this and we have broken the trend that actually started all the way back to July of 2016, and you broke it with conviction. If we have one, in fact, this is on a weekly basis. And so right now on a weekly basis, it's just a minor break. But it's a break. If we go down tomorrow, it doesn't have to be down like we did today. We could do half of that tomorrow. That would be a concisive break, wide price spread, accelerated volume, breaking a major swing. Guess what that means, folks? That means that you can get back to that level. And that level, just to give you an idea, is 101. And that level is the trading from, and this is where it looks like in a convection this could really go, which would be a mind blower, is that it can go back to the consolidation that we had from January of 2015 over to July of 2016. And on the S&Ps, if I put the S&Ps up, you're going to see it's the same type of setup. I'll put the SPY up so you can have the volume behind it. SPY. We put this thing's like sticking out like a sore thumb, really. And what you have there is that the S&Ps, you're at 257. You're talking about 211. And when you look at this, by the way, the last time, and depending on how many folks you've been around the Tigers and Tigresses, when these corrections start taking place, you know, this whole volume deal, man, the last time with volume, folks, $201. Yeah, you can go up with no volume, but guess what? When you're coming back down, that's where you're going. Pretty intense. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow finished down 1,032. You had the Nasdaq down 274. S&P's off 70. Let's go over to Zillow. Zillow came out with numbers also. So Zillow, where are we? Zillow closed at $46.36. That had been up $1.80 today. That's trading down to $3 right now at trading down $4 at 42.61. We take a look at this 42.61. It's going to be kind of where we started from. Yeah, this is interesting. 42.61 was Friday's low. Let's see what they have to say. This is a stock that held up now in this downdraft, folks. So earnings per share, the estimate was 19 cents. They made 19 cents. Revenue, they expected 277 million. They made 282. So bottom line is that they made their numbers. It's saying that the revenue, let's see, Zillow sees first quarter revenue 291 million to 296 million. So that they had estimated 298. So they're going to see slightly lower than they estimated. They see 2008 revenue at 1.3 billion to 1.32 billion. Now that is over the range. They had estimated 1.3 billion. They saw more than 151 million average monthly unique users in the fourth quarter, and that is up 8%. What you have, folks, inside the, let's pull this up and take a look at this, because we do a lot of business with Zillow, and it's really intriguing. So what's happening is that Zillow is taking over the whole buying and selling of real estate in quite a large way, folks. What they've done is this, you know, like when we sell houses, we pay, you know, let's say normally a brokerage house, a broker wants 5.5%, 6%, right? Well, the bottom line is that there's plenty of MLS listings out there that you can pay them $150. You pay the broker, you know, a distribution fee. They're doing work, whether it's 2.5% or 3%. So that's really the model anyway. That being said, what has happened is that when we're marketing these, we've been watching where the marketing is working. And we were marketing on Zillow, Facebook, and the Tampa Bay Times. Tampa Bay Times works great. It's pretty amazing, actually. So real estate-wise around here, that still works in a big way. Facebook's not even close. Doesn't work. Zillow is amazing. The reason that Zillow is amazing is that, number one, when you do the MLS, you're not paying for the listing, which is amazing. Because what Zillow is going to end up doing, so watch how this works. You pay $150 to the listing agent, right? So Zillow, Tulia, they pick up all the listings. So they're giving you a listing for nothing because of the fact of the matter, they sell the advertising around, okay? So picture that. That's what they do, right? What Zillow has just done, now we build a lot of new houses. So what they've just done is that they put together a builder package. And so you have the MLSs, and when you go on the Zillow site, you know, you'll have the MLSs that are up there. They have a certain dot on them. Now what they've just developed is that now with builders, they get another dot, and that other dot, what ends up happening, will automatically come to us. Two different things can happen. Now, on that service we're paying $350 a month for. But at all times, we always got $1 million worth of houses for sale, okay? So, but on that service, what happens is that the lead comes directly to you. So you have the shot to pay no 3%, right? Then I think that the next thing that Zillow is going to do, though, right? Because the more that I keep looking at this, the next thing, if this might be a year or 2 years down the line, they are going to turn around and say, okay, we're going to charge everyone to put MLSs on the site, even if they charge $20. Because it's like, why do they do that? Now, I understand why they do it, because when they were starting, they did it because that's how they get the business from all the brokers advertising on the site. Well, guess what? They've grabbed so much of the business, I think, that the business itself would turn around and say, okay, if they charge a small fee, say, okay, well, we're going to put it up there. We'll see. But I think business-wise, they're going to be taking over the retail part of the business in a much larger way in the next 5 or 10 years. And that's where their business model is going. So it's going to be pretty wild watching it. And if we look, now this is also a good indication just in watching the real estate market in general also. And what you have with Zillow, if you look at Zillow, well, you know, it's basically held up. It's at highs. It's not the end of the world. Let's go take a look at a couple of the other home builders, too. We'll go to Toll Brothers. Toll Brothers is down $220 today, off a high of $52. You're at 43. Okay, so you broke down. Yeah, this can get into like $38 pretty easily. Put this on a monthly. Yeah, $39 is game untold, and that's at 43 right now. We take a look at Lennar. Lennar is down from a high of 72. You're at 59. This is a nice setup. Now watch this. This is pretty cool. So Lennar was going into its highs of 2005, which is 68 bucks. You got to 72, but we broke that high, folks, last month with volume. Big volume, 96 million. Now you're backing down. You put Lennar on the list, man. This is going to be a buy. This is going to be pretty cool. Now, Lennar can still get down to 55. You're at 59. But this broke its high of 2005, broke it with volume. You're backing down with lighter volume, even in this type of market. And just to give you an idea, this week, you back down with 40 million shares. You're going into 87 million. You only have one more day left. That is a nice setup. Really nice setup. Let's go take a look. We'll take a look at Warren Buffett's monster out here. I think this is his. NRV. When I say his, NRV. I believe he has the NRV. Equity. Oops, no, 1 second. LEN. I'll find this. NVR, that's what it is, NVR. NVR, okay. So NVR. There it is. Okay, so this stock is traded at $2,788. No, I guess this isn't Buffett stock, but this always blows my mind because this stock is so high. So they market, build homes, do mortgages. I remember the stock. Okay, so this runs under a lot of different names. Ryan Homes, NV Homes. This is accumulation. They bought a huge amount of home builders. That's what they did on the downdraft of 27 and 28. So this is down from 3,700, down $1,000. That's intense. Well, guess what? It's up from $325, though. This is harder to gauge. You stay right there, folks. We'll be coming right back. Don't forget to get the stops in, folks. If you're long this market, get them in. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, don't forget, over at TFNN, we'll go to the main page over there. We have open house in the Tiger's Den. What open house means specifically, you can come in our trading room 30 days absolutely free. Come on over, check it out, tell your friends. We got a lot of great traders in there. There's going to be action in there tonight. Bottom line, most of the time, you got action, of course, about 12 hours a day. The way this market's trading, of course, today, there will be a big action in there tonight also because of the fact that, of course, you get futures traders in there. They're going to want to be looking at what is happening in Asia as well as Europe in the morning. But right on the front page of TFNN, we just happened, we were going to do it the month of February anyway. It's really cool that this is coming out this way. So we're coming into a Friday. You've had a down week. You've had the broker-dealer community come out yesterday as well as the day before saying buy, 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 things are on sale. Guess what? Down the tubes. It's very hard, folks, to come into a Friday on a down week and get a bounce. That's the real bottom line. What I expect you're going to see out here tomorrow is another downdraft. Now, that being said, this is what's pretty cool, so check out this part of it. So that's the bad part of it. Now, if that's what we get, I expect what you're going to have there. Then you're going to have the fear of God and everyone over the weekend that Monday is going to be like a total disaster. I would just go the opposite way in that. And what I'd be looking for tomorrow is that you come down, and you come down viciously, right? You get a couple big down ticks, because we haven't got the large down ticks yet for fear. And specifically, you'd have to get the down ticks. But if you got the down ticks, you got the market down, then that would actually set up a monster bounce on Monday. And I suspect what that would be all about is that you would wake up the central banks. The central banks would wake up, someone would come out with an announcement that all's clear. We're not raising rates. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Wow! Look at them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.